Let's ask Dan Primack. He's editor at Axios Business, and our very own Leslie Picker is here on set with me as well. Welcome to both of you. Dan, Cava, I still think about what you said. We need like some B2B software companies, but this still feels telling somehow.
It does. Look, I stand by that, issuers or prospective issuers want to see companies that look sort of like themselves. But certainly, I think IPO bankers are ringing off the phone today because, the one thing Cava certainly says is that institutional buyers, those mutual funds, hedge funds, et cetera, are interested in a new issue. And in this case, you mentioned Chairman Powell, a new issue that's dealing with high labor costs and high supply costs.
Right. And yet, Leslie, look at the shares. What are people saying about this debut, about the pricing, about the pipeline as a result?
I'm talking to a lot of investors who are very angry about not getting allocation to this deal. You can see why that would be. But it's all about scarcity with this one. Scarcity in the fact that it's coming at a time where we haven't really seen a consumer name brand buzzy IPO in about 18 months' time. So there's scarcity just in new issuance, period. But then there was also scarcity in the book because you had 3 long-only mutual funds who took up about 30% of the allocation here. You had some crossover investors, meaning those who were invested pre-IPO, bulking up at the offering price as well. So that left very little for the rest of the market to get into this. And that's why you're seeing the 30 times oversubscribed numbers and the aftermarket activity today.
I promise not to go on this rant every time we talk about an IPO. But Dan, okay, the only people who are going to do well are the people who got it at 22 and are flipping it in the open market. What do you say the odds are that this company is above 22 12 months from now?
Look, it is unlikely. If you look at the company, the most obvious comp here in terms of not just sort of company, but kind of recent IPO, relatively recent, is Sweetgreen, right? And Sweetgreen also had an enormous bounce at the IPO. It has come way back down. Now, granted, Cava seems to have better same-store economics than Sweetgreen does. But, I don't know if you and I had a conversation the day Sweetgreen went public, but if we did, it was pretty similar. The chart was pretty similar.
Right. And so I guess, Leslie, what I'm saying is the IPO model works well for people who get allocations at the IPO price and can sell them on the open. Great, no brainer. I'd want those shares too. But if my only choices are to buy it at 42 or not, that to me seems like a much easier call. And unfortunately, I'm not sure. I don't think this is the next Chipotle.
Well, there's research that shows that companies that double on the first day of trading usually don't stay that high or go higher from there for a certain period of time. I want to say it's 6 months to a year or something like that. So there is kind of this short-term risk, of course, with these deals that have so much momentum out of the gate and their ability to sustain them. Not true in all cases, but it's definitely something to be mindful of if you're buying shares today.
And that said, we know the market is also meant to kind of entice other companies in, right, Dan? Like you want to see the pop so that people want to go public, and they go public to give liquidity to employees and people who've been waiting. So Stripe, or who are some of the other ones sitting out there? Reddit, I guess. What are the prospects that we could start to Instacart? Are they coming to market? This is the window.
Instacart and Reddit are the two that we keep waiting for this year. Stripe's not going to do it this year. They got liquidity for employees through a different mechanism, so they're going to hold off. The expectation, there is an expectation that we are going to see not a huge number, but a decent number of IPOs post-Labor Day. And I will say what we've seen today with Cava, I think makes that more likely. I think if you were on the fence as an issuer trying to decide, well, we think our numbers are good, but man, is there going to be anyone who has any interest in buying? I think the Cava experience does say to them, there's a market here. There's a potential here for us.
Last word, Leslie?
I would just say that it's important to kind of extrapolate the types of companies that could go public in this market. People talk about profitability, but sector specific is also really important here too, because yes, the broader market is up, but there are certain industries that are still behind where they were, say, in 2021, when a lot of these companies were having deliberations about whether to go public. So they're saying, well, you told me in 2021 I could get this valuation. Now that's looking to be a lot lower. Maybe if I can afford it, I'll hold off to wait until valuations in the public markets in my specific area have recouped before going public, because I want to get the biggest bang for my buck.
And it reminds me, if fast casual is hot right now, Panera is evidently looking to maybe list itself again. They're probably looking at this and thinking, maybe, go ahead, Dan.
And Kelly, it's worth noting there's a connection between Panera and Cava, which is a guy named Ron Sheikh, who's the lead independent director at Cava, and he used to run Panera. So there's a connection between those companies.
Oh, he is interesting. He's always one to watch. It's funny how many industries, if you know the right people to watch, it can often lead you to the right places. I'll leave it on that more hopeful note. I had Cava yesterday, by the way, and it was delicious. Thank you both, Dan Primack, Leslie Picker. We appreciate it.